Most financial advice assumes you're disciplined and consistent. But if you're tired, busy, and honestly kind of lazy, this is the only way building wealth actually works. 3 rules. Set it up once, then let it run. Because hustle culture makes money sound like a personality trait. Like if you're not grinding 24/7, you're doomed. But real wealth usually doesn't come from intensity. It comes from systems that keep working when you're not feeling it, not thinking about it, or not even paying attention. So here are 3 principles that actually work for lazy people, aka normal people, who want to build wealth in the background. Let's get into it. Principle number 1. Remove decisions. Most people don't have a knowledge problem, they have a repeatability problem. I've tried the whole track every expense lifestyle. It works for a week, then you miss a day, you feel behind, and suddenly you're restarting next Monday. That's why relying on discipline is fragile. The lazy-friendly approach is different. Remove decisions. Because every decision is a chance to delay, negotiate with yourself, or do nothing. So the goal is to set up money rules one time and let them run automatically. Here are the big ones. Rule 1. Auto-invest on payday. Not at the end of the month, not whatever's left. The day after you get paid, money automatically moves to investing. Start small if you need to. $25 per paycheck is fine. The point is consistency without thinking. Rule 2. If you have a work retirement plan, use it, especially if there's a match. Set your contribution rate once and let it run. You don't need motivation to take free money, you just need a default. Rule 3. Keep it simple. One plan, not 10. If you need 5 apps and constant decisions, it turns into a hobby. A lazy wealth plan should be simple enough that you can explain it in one sentence and then stop touching it. Which leads to principle 2. Fewer assets, longer time. Here's the uncomfortable truth. Lazy investing often beats active investing because boredom prevents mistakes. Most investors don't lose money because they picked the wrong thing. They lose money because they keep messing with the plan. They check the market too much, they panic when it drops, they chase what's hot, they sell at the worst time and buy back after it already ran up. And every time you touch your investments, you risk leaking returns through bad timing, taxes, fees, or emotions. So the lazy approach is fewer assets, longer time. Pick something simple and diversified that you can hold for years, keep adding automatically, and stop changing the plan every time the internet gets loud. A good rule is if you're not willing to hold it for years, you probably shouldn't buy it. Because wealth isn't built by winning trades, it's built by staying invested long enough for compounding to do what it does. Compounding feels slow in the beginning, that's why people quit. But if you keep feeding the system and leave it alone, boring starts to look really impressive. Principle 3. Design for forgetfulness. The best financial system is the one you forget exists. Because if your plan depends on you being focused and motivated all the time, it's not a plan, it's a wish. So build a setup that still works even when you're distracted. Step 1. Automate the basics. Auto-pay your essential bills if you can. Rent, utilities, minimum debt payments. Not because you can't handle it, because missing one payment can cost you more than a month of good habits. Step 2. Automate investing. Same idea. It happens whether you're in the mood or not. Step 3. Build a small oops fund. This is the buffer that keeps normal life from turning into debt. It's usually not the huge disasters, it's the random stuff. Car repairs, a dentist visit, a broken phone. A great first target is $500 to $1,000 if you're starting from zero, then grow it over time. And one more lazy trick that works ridiculously well. Use raise moments, not willpower. Whenever your income goes up, increase investing by 1%. 1% is small enough that you barely feel it, but over years, it can make a massive difference because you're redirecting future money before you get used to spending it. The lazy wealth setup. Do this once. If you want the simplest version of everything I just said, here's the set it and forget it checklist. 1. Pick one investing account you'll stick with. 2. Set an automatic transfer for the day after payday. 3. Choose one simple diversified investment you can hold long-term. 4. Increase contributions by 1% whenever you get a raise. 5. Build a small oops fund so surprises don't become debt. That's the whole idea. No daily tracking, no complicated strategy, no constant decision-making, just a system running in the background. Hustle culture says wealth comes from working harder than everyone else. But in real life, wealth often comes from building a boring system and not messing with it. Smart people optimize effort. Lazy people optimize systems. And systems win because effort gets tired. Thanks for watching. If this helped, hit the like button and subscribe for more simple, practical money strategies. Let's build wealth together.